2016 saw the end of a period of expansion for the NZX, with the total number of listed issuers on the NZX main board dropping for the first time in about 5 years. This was a result of a number of delistings, often following takeovers, which is a trend we're predicting to continue in 2017. On the other side of the ledger, we only had 3 companies join the NZX main board by IPO: Investor Property, New Zealand King Salmon and Tegel, which is a disappointing number for New Zealand.
Well, we think, unfortunately, 3 IPOs will be the new normal. Last year we had a couple of insolvencies and some delistings. So Wynyard, for example, went into voluntary administration. This year we've already had 3 or 4 takeovers announced before the year's really got going, and so that must be of deep concern to NZX. Certainly it's a concerning development for us. We need a thriving capital market to be able to make sure that the New Zealand economy can grow.
2017 is going to be an interesting year for the capital markets because there is an awful lot of political uncertainty. It's an election year in New Zealand. The Trump administration is still going to work on their significant reforms. So one trend that we're predicting we may see for IPOs as a result of this uncertainty is a favouring of the front-end book build mechanism. A front-end book build effectively means that the IPO is priced and investor demand is ascertained prior to the issuer actually registering the offer documents and going public with the offer. There's always speculation as to who may choose to come to market in a given year, and some of the names that have been thrown around to date include Hypal, Oceania Healthcare, who's been a perennial listing candidate, Dairy Farms NZ, the UK's Aria NLG, and Complectus, who did come very close to IPOing at the end of last year, but are now rumoured to be pursuing an M&A process. While we're predicting that the number of IPOs this year may match similar lacklustre levels that we've seen in the last couple of years, we do believe that secondary capital raisings will remain strong. What we do know is that there are a lot of investors still looking for places to put their money, and they seem to be prepared to do that with already listed companies.
The NZX must be a bit disappointed with the take-up of the NXT market. At the moment there are only 4 listings on it, and there's no sign that there's a rush to join that market. We are considering whether in the longer term New Zealand can sustain 3 capital markets. We've got the main board, the NZAX alternative market and the NXT market targeted at growth companies. But it's very disappointing that there isn't more activity at that smaller end of the market from the growth companies. Unfortunately, a number of them have been choosing just to list on the ASX, which is a really concerning trend for New Zealand companies that we'd like to see listed on their home market.